Welcome to our channel, your ultimate destination for personal finance, investing wisdom, and financial freedom. In today's video, we're diving deep into the timeless classic, The Intelligent Investor by Benjamin Graham. If you're serious about building long-term wealth through smart investing, this is the book you need to study. This isn't just a book, it's an investing philosophy, a mindset, and a lifelong guide. Stick with us as we explore why this book remains the #1 recommendation for investors worldwide. Let's start with a bit about the author, Benjamin Graham. Known as the father of value investing, Graham taught at Columbia Business School. He mentored Warren Buffett, one of the most successful investors in history. Graham's teachings focus on protecting yourself from substantial error and teaching you to develop long-term strategies. He believed that investment should be based on analysis, safety of principle, and an adequate return. Now let's talk about the core philosophy of the intelligent investor. Graham introduces two types of investors, the defensive investor and the enterprising investor. The defensive investor seeks safety and minimal effort, while the enterprising investor is more hands-on and analytical. This distinction helps readers choose an investment style that suits their temperament. The key is knowing your own risk tolerance and time commitment. One of the central themes in the book is the concept of Mr. Market. Graham personifies the stock market as an emotional partner who offers you prices each day. Sometimes Mr. Market is overly optimistic, sometimes he's deeply pessimistic. Your job as an intelligent investor is to make rational decisions based on facts, not emotions. This teaches us the importance of staying disciplined and not reacting to short-term market movements. Another vital lesson from the book is margin of safety. This means buying stocks at a price significantly below their intrinsic value. The margin of safety protects you from unforeseen market drops or mistakes in judgment. It's the bedrock of value investing and helps ensure long-term capital preservation. Even Warren Buffett has called this the most important concept in investing. Let's look at asset allocation, another topic Graham explores in detail. He recommends a balanced portfolio between stocks and bonds depending on market conditions and investor comfort. This provides stability during downturns and growth during upswings. Graham believes that a portfolio should never be less than 25% in bonds or more than 75% in stocks. This strategy helps manage risk and volatility in unpredictable markets. Graham also warns against speculative behavior. He differentiates between investing and speculating. Investing is based on analysis and a long-term plan. Speculating is driven by trends, rumors, and emotions. He strongly advises readers to avoid speculation and focus on sound investing principles. A valuable part of the book is the updated commentary by Jason Zweig. Zweig adds modern context and examples to help readers understand Graham's principles in today's market. He provides insights into tech stocks, market bubbles, and current investor behavior. This makes the book more relatable and easier to digest for newer investors. It bridges the gap between classic investment theory and today's complex financial landscape. Now let's talk about some practical advice from the book. Graham advises investors to always do their due diligence before buying any stock. This includes studying financial statements, evaluating management, and understanding the company's business model. He also emphasizes the importance of patience in investing. Good returns come over time, not overnight. The book also covers market history and investor psychology. Graham explains how market cycles repeat, driven largely by human emotion. Fear and greed are the two dominant forces in investing. He urges readers to stay emotionally detached and stick to their strategy. This emotional discipline is what separates intelligent investors from the rest. Let's talk briefly about some key takeaways. First, always invest with a margin of safety. Second, be emotionally disciplined and rational. Third, know your investor type, defensive or enterprising. Fourth, avoid market noise and focus on long-term value. And fifth, never stop learning and reviewing your strategies. Why is the intelligent investor still relevant today? Because the principles in the book are timeless. Markets change, trends evolve, and technology advances, but human behavior stays largely the same. The same psychological traps that existed in 1949 still exist today. That's why Graham's lessons are just as critical now as they were then. For beginners, the book can be dense, but don't let that discourage you. Take your time with each chapter. Reread concepts and apply them to real-world scenarios. You'll gain insights not just about investing, but also about discipline and decision-making. Many seasoned investors revisit this book regularly to sharpen their thinking. You might wonder, should you read this book even if you don't plan to invest actively? The answer is yes. Understanding how markets work helps you make better financial decisions overall. Even passive investors benefit from knowing the principles of value investing. It can help you avoid scams, bubbles, and hype-driven investments. Warren Buffett has repeatedly called The Intelligent Investor the best book on investing ever written. He read it when he was 19 and says it changed his life. If that's not a reason to pick up the book, what is? The wisdom inside those pages has created millions in wealth for people who applied it properly. It's not just about making money, it's about making smart, informed decisions. As we wrap up, here's our final verdict. If you read only one book about investing in your entire life, let it be this one. It's a comprehensive, no-nonsense, principle-driven guide to building wealth over the long term. It doesn't promise quick riches. It teaches discipline, analysis, and rational thinking. These are the true tools of every successful investor. Thanks for watching today's video on The Intelligent Investor by Benjamin Graham. If you found this breakdown helpful, make sure to give this video a thumbs up. Your support helps us create more valuable content for you. Don't forget to subscribe to the channel for more book summaries and financial insights. Hit the notification bell so you never miss an update. Comment below if you've read the book, or plan to. We'd love to hear your thoughts and experiences with it. Also, let us know which investing book you'd like us to review next. Stay tuned, stay informed, and remember, wealth is built with patience and knowledge.